The DogeChain token has officially launched. In today's show, I'm going to be running you guys through how to claim your airdrop, what's happening on DogeChain, is it potentially the next 10x chain that could perform very well, or is it simply just another rug or another Ponzi? I'm going to be breaking down in this video exactly what DogeChain is, what it does, and what I think about the chain. The first thing to note about DogeChain is that it actually isn't a real L2. What DogeChain is it's essentially a network built on top of Polygon. Now, this network, which is built on top of Polygon, is operating on the Ethereum virtual machine, which means you can add DogeChain to your MetaMask and bridge assets across to it and interact with dApps using EVM compatibility, similar to what Phantom does, similar to what Avalanche does. Essentially, this operates as a sidechain, which allows you to interact with dApps on the EVM. So DogeChain, although they're kind of branding it as this L2 network, technically, it's built upon an L2, which is Polygon Matic, but DogeChain in and of itself is simply another chain. Now, the other thing to note is that it's not an official chain made by DogeChain. The developers of DogeChain are actually the developers that developed QuickSwap, which is the DEX on Matic, and these developers aren't directly linked to Doge, although I have heard that they have their support and their blessing. It's not officially related. So some people said that DogeChain was this official Doge spinoff. Well, that's not true either. It's not officially related, but they do have the blessing of Doge itself, and a lot of the major developers that worked on interesting things to do with Doge are deploying on DogeChain, some of which are just doing so for fun. The next thing to note is that the Doge utility is really one of the main objectives on this chain. It's giving utility to the Doge token itself, which otherwise doesn't have much utility barring being a meme token. So the Doge token, which you can bridge across from your exchange or another chain across to DogeChain, can now actually be used to interact with dApps. We've seen a lot of rewards for Doge holders that have actually staked it to be able to earn emissions on this new chain, as well as reward for WDoge or wrapped Doge holders that deposit Doge onto DogeChain to receive the upcoming airdrop, which I'm going to get to in a second, how to claim that airdrop if you've already bridged onto DogeChain. So it's giving utility to a token that otherwise doesn't have much utility beyond being a meme. But we know in crypto how important being a meme is. In the 2021 cycle, memes were one of the reasons why we saw that major influx of liquidity, which resulted in a lot of altcoins exploding. NFTs, I guess, in and of themselves, really rely on that meme culture, and that's what's driven crypto for many years, especially in the last bull run. So I don't think you can fade the importance of memes in crypto, and that's why when I see some people saying, DogeChain will fail, it's just another rug, Doge is crap, like although that logic is kind of founded with some logic, at the same time, I'd point out the flaw of the crypto market is so meme dominant. So to ignore memes, in my opinion, can be quite unwise because there are profits to be unlocked by kind of harnessing this meme culture and looking objectively at the meme culture. Because let's say this DogeChain play here ends up performing quite well. The play here isn't strictly in and of itself harnessing the power of the meme, it's harnessing the power of the people that believe in the meme. Two very different things, because essentially we are on the winning side of things. We're on the winning side of the equation because we potentially be investing in a product which just exposes yourself to the meme culture without having to get too nitty gritty and exposing yourself to rugs in the meantime. So never underestimate the meme culture, as Root DeFi said, because both the dumbest and some of the smartest people are all over DogeChain at the moment. I mean, I'd like to consider myself quite smart, and I'm very interested in getting involved. By the way, my Twitter at the moment is currently locked. Very annoying situation. So if you have noticed you can't access my Twitter, I'm working on getting my account back. Hopefully I get it back within the next 24 to 48 hours, but hence the reason why I'm using other people's tweets instead of my own in today's show, for those that are asking in the comments. The other thing is, before we get into how to claim this DogeChain airdrop and the tokenomics, which I think are going to be a major deciding factor as to whether this chain is successful in the long run or not, you need great tokenomics. Make sure to sign up for a BYBIT account, link in the description, if you want to take part in the trading challenge. Getting quite interesting now with Sheldon, I think rank like rank 30 or 40. He's really pushed up the ranks, and then you've got Ran pushing up in rank 100 now. So they're both kind of battling for the top spot. Me personally, I'm still sitting a few hundred ranks back. I'm trying to make a little bit of a comeback. Let's see if I can do it over the next couple of weeks. But I'm just enjoying the fun nonetheless. And if you do want to get involved, there is still 9 days to get involved, and potentially win up to $10,000 if you come first place in a $50,000 prize pool, as well as the sign-up bonus, the $4,200 bonus for signing up with the link in the description if you want to sign up for a BYBIT account. So what is going on with this DogeChain launch? There was obviously a lot of hype that resulted in us seeing the DogeChain price absolutely pump last week ahead of the DogeChain launches. A lot of people were speculating on an airdrop, bridging funds in, getting involved with a bunch of crazy DeFi applications, a lot of which rugged, some of which have made monumental 10 to 100x gains for investors. The reason all that was going crazy, and still is to an extent, is because of the DC token, which is the DogeChain native token of the L1. What they're doing is they're minting 1 trillion DC tokens upon launch, and they're putting it into circulation using various mechanisms. The primary use case for this token currently is it essentially acts as a reward token. So you're incentivized to stake it. They pay out using DC rewards. And there's also speculation. I haven't been able to get clarification though, as to whether DC will be used potentially as the gas token. We know that was Doge in the very beginning, but DC being used as the gas token would give it an extra element of burn on the supply side, which is something that we want to see for verifying whether the tokenomics are good or not. So the other thing they're doing is they're airdropping. So anyone that got involved with DogeChain last week, I said in the video, look, if you've got Doge, you may as well just deposit it into DogeChain and potentially get your hands on a DC airdrop. Anyone that anyone that deposited Doge to the DogeChain is eligible for a snapshot if you deposited from the 1st of August till the 23rd of August 2022. So the cutoff was 2 days ago, but if you did deposit Doge into DogeChain, if you're holding wrapped Doge on DogeChain, then you are eligible for an airdrop. The airdrop is 3% of the entire supply of tokens to all wrapped Doge holders, that is. So you need to be holding wrapped Doge. If you had swapped it for some other crazy DeFi protocol like one of these, then technically you're not eligible. You have to be holding wrapped Doge in your wallet to claim the airdrop. They're going to give out exact details on how to claim it soon. But for those people, you will get your hands on some DC tokens. But for the rest of us, because I know not everyone got involved in the airdrop, is it too late to get involved? And when this launches tomorrow, should we be getting involved? Should we be buying DogeChain tokens? Is it potentially the next 10x? That is the question. The first part of answering that question all relies on the tokenomics, because at the end of the day, a token like this that is being printed heavily in order to pay out yield rewards has to have supply side mechanisms and demand side mechanisms that can attract liquidity, that can counteract any effect that emissions may have. Because what we don't want to see, and what we've learned obviously over the last couple of years in DeFi, is projects that emit without counterbalancing those emissions on the other side of the curve end up being the ones that gradually trend to zero. And we've seen it time and time again. I don't need to remind you about Sunny or Saber or any of those other protocols that we invested in last year, because those were, I guess, the first iteration of DeFi that ended up resulting in some pretty poor results tokenomics-wise. So what they are doing with their token allocation in terms of DogeChain is this: 3% is going to early, I say shibes, but it's early shibs. So apologies for my pronunciation there. It's got an E, so it put me off. 3% of the supply of DC will be immediately distributed to wrapped Doge holders. Anyone holding wrapped Doge will be getting 3% of the initial supply. 15% of these tokens are released upon token launch, which is, I think, just in a few hours, while the remainder will be released linearly over the next 12 months. So if you are claiming the airdrop, you'll get some now, and you'll get some every month for the next 12 months. Then 9% of the supply will be distributed as intermittent airdrops following right after the early SHIBs airdrop during a period of 48 months. This means that 0.18% of the supply is distributed to holders on a monthly basis, 15% up front, and then the rest linearly over the next 12 months. So airdrop holders get a total of 12% of the total supply, which is good because it rewards the initial holders. But does that mean like it's good tokenomics? Is it bad tokenomics? Well, 12% actually isn't a lot. And although a lot of these 12% may potentially dump these tokens, I know a lot will hold as well. The more important part is where the other tokens are being allocated. And this is exactly how it's being broken down. 29% is going to an ecosystem DAO fund. What this means is that 29% of the tokens, or 290 billion DogeChain tokens out of the 1 trillion total supply, will be used to pay out VEDC holders. What does this mean? You can stake your DogeChain tokens, lock them up. In exchange for locking them up, you will receive A, governance voting rights, and B, the right to claim rewards or yield from locking up those tokens. Now, 29%, which is the vast majority of the supply, is being geared towards VEDC, so rewards for stakers. I think this personally was a good decision because 30% being the primary place where emissions are being directed is going directly towards incentivizing liquidity. So the reason why anyone would be interested in bridging onto DogeChain potentially is because of the insanely high yields a lot of these platforms are offering. We've already seen the price pump on a lot of these in speculation of this airdrop, but at the end of the day, although this may not be the most sustainable model, incentivizing liquidity with high APRs, it does work because people are going to come into the chain, farm for those crazy like 400 or 500% APRs, and then eventually dump their tokens. So although long-term, maybe Dogecoin isn't something you would want to be holding the bag on. Personally, I wouldn't be holding the bag long-term on this. In the short term, you can't deny that there possibly will be opportunities, especially when the yield in the very beginning will be very, very high. But then the onus is on you to get in and get out very quickly if that's the decision that you choose to make. Because that is a large supply going to the vesting contract. 15% goes to network operations, 12% goes to the airdrop, 1% goes to the Polygon reserve. We know that QuickSwap is the official DEX of DogeChain. It's not DogeSwap. The official DEX is QuickSwap. 12% goes to the foundation, and 5% goes to marketing, and another 5% to liquidity. So very interesting allocations here. I actually overall don't think this token distribution is horrible. I actually don't think it's horrible at all. I've seen much, much worse. The fact that the team only gets 12%, contributing team members only get 10%. This isn't a huge allocation. 22% to the foundation and the team, 5% to marketing, 5% to advisors. That's not too crazy either. So 32% are in the hands of, I guess, centralized entities. But that's actually not that high. I mean, many other L1s, like Phantom was over 40%. AVAX was, I think, 30 or 40% in the beginning. Coming in around 30% for, I guess, the centralized side of the token distribution is not crazy at all. And we also know that the founders themselves, the team members, have a 2-year vesting period. So the tokens vest linearly over a period of 2 years. These are actually very long vesting periods. So we got the 4-year on the reserve, 2 years on the team, 2 years on market making, 4 years on network operations. They are quite long vesting periods compared to other projects that we've seen launch. So overall, what do I think of these tokenomics? Is this going to result in a dump? Is this going to result in a pump? More impressive than I thought. Solid tokenomics. Although at the same time, as I alluded to before, I think the process of rewarding holders with quick yield for staking or locking tokens, that may work in the short term. Long term, I do think inevitably that isn't always the most successful strategy. So what really is going to drive DogeChain's adoption of the DC token is not the yield. It is the applications built on Doge. So at the end of the day, the better the applications, the more Doge holders they can onboard onto the chain, the better this chain will perform. And tokenomics aside, this will be the primary driver of speculation in this ecosystem. So the most important thing is that Doge token holders start to expose some of their holdings to DogeChain, because Doge has a massive market cap. It's a top 20 project. If just 10% of those holders bridged onto DogeChain, that would result in a monumental increase in market cap, because the chain only has 2 million transactions, an all-time high of 100K users. Millions of users hold Doge. So there's potentially millions of people worth of scope for growth of how many users this chain can acquire. Because I don't see this chain. I mean, Actually, it potentially can, but I don't see this chain acquiring a slice of Avalanche's pie. I don't see this chain acquiring a slice of Ethereum's pie. That's not what it's for. The chain is built to maximize existing holders and appeal to the degenerate retail audience that were farming on let's say BSC in 2021. We saw Binance Smart Chain, just how prominent that was in the first few months of that real DeFi boom that we saw. Phantom as well came out with a lot of projects. I mean, in hindsight, a lot of them were structured on Tokenomics, and so was BSC, but that was quite successful in extracting early liquidity. Is the market condition a little bit different now that we're in a bear market? Yes, I don't see the same phenomena occurring because market conditions are completely different, but I guess it kind of does have that potential of acquiring those farmers that were previously degenning on BSC, previously degenning on Phantom, and are now looking for a new home despite it being a bear market. Now, this will be a fraction of the percentage of the people that previously would have farmed, but it still is a percentage, and obviously that is in addition to the existing Doge holders that may want to just expose themselves to a little bit of fun here. Because if you're able to stake Doge tokens in an LP and earn a couple 100% a year, at least in the first few months, a couple 100% APR, like why wouldn't you? The only risk at that point is smart contract risk. So the way to actually bridge across your assets if you are a Dogecoin holder is directly to the DogeChain from the DogeChain Bridge. So bridge.dogechain.dog. It's not even .com or .org, it's .dog. You can connect your wallet and your MetaMask wallet and bridge across from one chain to the other to get your assets across to DogeChain. Unfortunately, if you didn't watch the video last week and you hold Doge, then and you didn't bridge your assets onto DogeChain, then you can't claim the airdrop now because the snapshot was 2 days ago. But for anyone that wants to have a bit of fun on the chain with your Doge tokens, you can do so by bridging across and also potentially staking when all of these dApps launch. But the gains we've seen are honestly insane. Like I haven't seen gains like this in a long time across across an ecosystem as a whole. A lot of these tokens have pumped. This is just in the 24 hours. We're still seeing 10x's. But over the past few months, we've seen some projects go up 5, 10, 20,000%. Over the last 6 hours, we still see gains of like 300% on a lot of these projects. Over the last hour or so, we even see crazy gains as well. So this is across all the dexes on DogeChain. The official one is QuickSwap, but a lot of people speculate on YodaSwap, DogeSwap, etc. Just beware, they're not audited. So if you want to be real safe, then you would do it on QuickSwap. But at the same time, I don't think anyone using DogeChain wants to be safe. You're kind of chucking in gambling money, right? Because you're basically you're spinning the roulette wheel when you're investing in these protocols. But look, if you hit that number, that lucky number, you could potentially make a 96,000% return. It's pretty crazy what we've seen, but it just goes to show that despite it being a bear market, there is still retail interest in speculating on memes, albeit less than usual. There is still interest out there. The TVL in total of DogeChain is actually at 15 million now, which is actually quite a lot. And this is considering that the airdrop hasn't even taken place yet. So if we do see some of these applications starting to launch on DogeChain, which is really where I think this chain is headed, aka major applications from other chains bridging across, because if they can deploy, since it's EVM compatible, why not deploy if you already have a dApp? Take advantage of this initial liquidity boost, then I think we're going to see an increase in this TVL. Because let's say you are, I wouldn't say they would necessarily deploy, but let's say like you're a cross-chain DEX or a DeFi protocol. There's many ones that I could point out. SushiSwap, many other ones, many other small caps, KyberSwap, Beefy Finance, all these kind of protocols. Maybe they're a little too big for DogeChain right now, but I do see over time some of these protocols starting to deploy on Doge because they're not stupid. They know they can take advantage of the memes in the short term. They know they can take advantage of an influx in liquidity. So I think the real driving force behind DogeChain will be seeing some of these applications actually deploy. Being EVM compatible, that facilitates deployment. If it was operating on a single state, like a Solana or a NIA, okay, that's a completely different discussion. You need crazy ecosystem development to start to attract liquidity. But I guess the downside of EVM compatibility is there's a lot of other options. So once your money is locked in an EVM chain, it's quite easy to bridge off the chain. and we see liquidity fragmentation across many EVM compatible chains. This isn't DogeChain specific. This is also relevant to your AVAXs, your BSCs, your Phantoms, your Polygons, etc. Very easy to bridge chain to chain. Whereas we've seen the net outflows, net inflows on a chain like Solana has been more positive than some of the EVM compatible chains in terms of relative net inflows. So compared to the amount that was on chain previously, not talking about bridging to another chain, those ecosystems are a little more sticky is the term I like to use. Sticky liquidity, meaning when you deposit, the likelihood of that liquidity unsticking is less because you've got your native wallet, your native ecosystem. It's both a blessing and a curse. It's harder to bridge onto the chain. It's harder to bridge onto the chain, but it's also harder to bridge off the chain. So that's a downfall on the inflow side and a positive on the outflow side. So DogeChain has the benefit of the inflow side. The outflow side means it can be short-lived hype. So you expose yourself to that element of risk. 15 million is quite a large amount of TVL for something that's only been out for a few weeks in a bear market, in my opinion. Obviously, some of these other chains have billions of dollars of liquidity. I certainly wouldn't turn a blind eye to $15 million already. And 2 million transactions, although not a lot compared to DogeChain holders specifically. If we look at this objectively, that is still quite a high amount. The Doge token itself, if we track the price here, it has actually made higher lows. The only concerning thing on the 4-hourly chart for Doge is this support line here. We can see we've been bouncing off this support, constantly flipping this support and resistance. So the fact we're under this right now means that if Doge wants to bullishly confirm, it would need to break above this support line, retest, and then it has 3 major AMAs, not AMAs, that's an Ask Me Anything, 2 major moving averages to fight. So it's got quite a lot of resistance here, which is why Doge itself doesn't look like the most bullish structure on the Doge token. This big run up in the lead up was as a result of the initial hype of people bridging on. This major dump down was a lot of that hype subsiding, and now we're back into this range. If you're a long-term accumulator, this isn't a bad range to accumulate. You've got multiple ranges you can accumulate Dogecoin at. The bottom of this liquidity box is one of those major zones. Then the next zone that comes to mind is the next horizontal ray of support. If you wanted to accumulate, and if you wanted, and you're bullish on the Doge token itself short term, then I even don't think at these levels on support is a bad buy. But I would just wait for us to break above support and retest. Because obviously if we're buying in the short term, you enhance your risk profile a little bit. And that goes for any token right now because most tokens are printing a similar pattern here. The Doge token itself, although it doesn't directly benefit from DogeChain, it indirectly benefits because of the increased demand for the Doge token, and not just demand, increased utility, I think, is really the major focal point here, because Doge previously not having much utility, you can actually now do something with it. But all tokens are in a similar scenario right now. That you could say the exact same thing for Ethereum even. Despite having a major pump, it's approaching major resistance here with the 3 MAs on the 4-hourly and then this horizontal ray at 1700. Major level of resistance that we need to cross. We did bounce out of this box here, this key liquidity zone from 1538 to 1629. However, we are approaching some resistance now in the short term ahead of the Jackson Hole. So the Jackson Hole is the big speech that Powell is making on Friday. This is why the markets are so sideways and so stagnant, because everyone's waiting to hear what comes out of Jerome Powell's mouth. And this will dictate where the markets are headed next. I think we are going to continue to see a choppy market like we've seen this week into Jackson Hole. I don't see, I'm expecting a lot of volatility, but I don't see clear confirmation of market direction until that Friday speech, because we're going to see an indication of how heavily the Fed wants to hike rates, how aggressively their tone is. Do they come out extra hawkish? Do they come out slightly dovish? We really have to wait and see for Jackson Hole. But higher yields including the 2-year, have really been printing recently. And we see the market going a little bit more risk off. The DXY also pumping, maybe forming a double top here, but still, since these 3 major bounces off long-term support, has performed very, very strongly. So with the DXY pumping, treasury yields increasing a little bit, there's just a little bit of caution in the air at the moment. So we definitely need to wait and see until Friday to see how the market reacts to Jackson Hole. Which the major expectation right now is that they'll try and realign rate expectations with current Fed thinking. The probability still lies in the way of a 50 BPS hike. If we get 70 BPS, I think inherently bearish for the market, because it's slightly more steep than a lot of investors would like to see. But tomorrow isn't the big rate hike. Tomorrow is the announcement that will signal the future rate hike mid-September in the next FOMC. So there's a lot that's going to happen on Friday. Until then, just chill out, relax a little bit, maybe research some crazy degen projects on DogeChain if that's what tickles your fancy. And then on Friday, that's probably going to be a very volatile weekend, is my expectation. So let's see what happens on the weekend. Someone said it's minting constantly, not touching. Yes, but let's think of this a little bit less linearly. Okay, so the DogeChain token is constantly printing. So that means it has a lot of supply side coming onto the market. But what does that actually mean? Well, that supply that's coming onto the market is being driven or incentivized with liquidity, right? So they're going to pump the APRs in order to attract liquidity. Okay. So essentially that will inevitably lead to more people bridging onto the chain, which increases the net TVL. If the net TVL increases and attracts more liquidity into the market, then what is the main beneficiary of DogeChain? Is it the DC token itself? I would argue no. I'd argue the main beneficiary at that point becomes the best dApps on the chain, which arguably have better tokenomics. Now, I can't tell you what they are yet because not everything is launched. We're still very limited in the tokens that have officially launched on DogeChain, but that we're going to see dApps deploy on DogeChain. Some amazing applications that we must keep our eye out for that will harness the liquidity incentives without exposing yourself to emissions directly from the DC token. So people may swap out of the DC token into other projects that launch. That is the way that I am personally viewing this DogeChain launch. It's not so much let's ape into DC itself. It's let's just sit back, look at the influx of liquidity, and then start to pick off the new projects that launch as they come. It's very risky stuff. You put very little money into these projects if you do so, but that's the way I'm approaching it, because I mean we've even seen the first Tomb fork launch on DogeChain. We saw what happened in the early days of Tomb. We may see many forks of other big protocols that come onto DogeChain that are essentially like we could see a balancer fork like Beats. We could see even Beats itself deploy on DogeChain. Like we don't know who's going to deploy. And when that becomes the case, that will open up opportunities for token holders of those tokens. And that is where we invest. DogeChain itself and the DC token itself, that is the major liquidity incentive for people to come onto the chain. So that's the way I'm thinking about DogeChain. Let me know what you think of DogeChain in the description. Do you think it'll succeed, fail? Personally, I think it has a high chance of succeeding. I think although kind of novel in its approach, although a little bit meme-centric, or not a little bit, very meme-centric, I think there still is a demand for a product like this, and I don't think we should fade memes in the market. And when there's opportunities to make money, there's opportunities to make money, whether that's from memes or whether that's through protocols with utility, which we prefer long-term, of course. But in the short term, a project like DogeChain, not just the project, but the chain itself, it can really perform well. And I'm not going to fade what can come of DogeChain, not even just in the short term, but in the long term too. It could just be one of those BSC type chains that has some cool dApps deploying every now and then, and has meme retail support. And then, one day we may see an Elon Musk tweet, and boom, that's when you get your massive pop off in price. You never know, especially with something like Doge. All it takes is one tweet. One tweet is all it takes. All right. Thank you guys for hanging out with me. I'll probably see you tomorrow if I'm not too busy crying over my Twitter account being deactivated. And hopefully we get that back by this time tomorrow, though. And I can actually keep providing you guys some alpha on Twitter. But until then, I'll see you in the next one. Peace out.